All right, guys, this is Brian Lewis with MMT Investing, and I have trouble getting my videos published through the TradingView platform. So I'm going to try to get an overview video out through TradingView, but most of my videos are on YouTube. And I'm going to do a look at the whole bubble here and the technicals, cyclicals, and what we're at a critical point right here on the S&P. And I'm out on the weekly here, so you can see my crazy text here. But so off of the bottom of the housing bubble, we have this super long-term support line that we're reacting on now. And this is a 12-year bull market line here. That is where we're getting all of our action over the last few weeks. And we've already reversed off of this support line here from the Volmageddon bottom. So Volmageddon was really this top back here, but the 2018 bottom here I'm calling Volmageddon. And so we've already hit this line. So I wanted to look at a few cyclical ideas because we are in a credit contraction cycle according to the financial data, and it looks like it should be going out to sometime in June, maybe not that far out, but we should have another move down. We kind of get a down and a bounce in this kind of cycle, and we didn't get much of a down bounce at the top. I don't know if this would count as a down, but it looks like we should get another move down in the cycle before we switch out into the next cycle, which would be an expansion growth phase. But right now we are in a credit contraction down cycle, and you can see this thing is nuts, and we have blown off the top of our everything bubble, and we've already terminated one of our major tangent lines, or really two. There's a tiny tangent line in here as well. So we've already destroyed these two tangent lines, and now we're on this tangent line, seeing if we can terminate that thing and get down the backside of the bubble right now. And so let's look at some MACDs and just see where we are. So out on the weekly, I mean, this is kind of a year over year outlook on where we are. And so looking out maybe a year or two, this is very bearish to be down here on this side of the MACD. And you can see these lines are converging, but not really. The blue line's not looking to pull this thing way up. So that long term looks bearish and looks to be staying pretty bearish. And let's get into like a 1 day here. All right, so here we can see that we're bullish. So this is sort of the cyclical quarterly kind of outlook on where we are. And we are up here on this side bullish, but we have flipped, and this blue line is going to be trying to pull the red one down now. So what we need for the bears is to get down onto the bear side of the chart below the zero line. That would be a big bearish swing. And for the bulls would want to see a bounce on the bull side of the chart. So that is undetermined, but this is sort of a bearish move right now inside of a bull territory. And we can see that. I mean, obviously we have this huge bull run here, and let's zoom in a little tighter and do a couple more and see what it looks like. And so on the Bollinger Bands here, you can see that we're kind of sticking to the downward edge here. So this is a bearish look, and we're down here bearish, and it doesn't look like it's pulling up too high to get more bullish here. So this is kind of a bullish outlook for a few weeks, or I'm sorry, bearish. This is bearish and looking to stay bearish. It's a little bearish, and then out to a week, it's kind of neutral. This looks like it'll just swing around zero or something out for the next couple days. And then today, it's looking neutral and neutral and neutral. Okay, so it's very long-term bearish, and it looks short-term, like month over month. So everything looks bearish except the immediate day trading into close today looks neutral, and this one cyclical view here where we are in bull territory but making a bear move is the big thing to watch, if this is a switch over or not. As far as the cyclical movements go, that's the huge thing to watch. Do we stay in bull territory because a bull side bounce would be super, super bullish, and this would be crazy bullish for the whole market. Or do we get down here in bear territory and see if we get some bear action? And that is the outlook here for the rest of this credit contraction cycle. And just as far as the financials and fundamentals and everything go, it does look like we should be looking for a pull down just on the data, on the cyclical data, and not taking into account what the Fed may or may not be doing. This is just looking at the chart and the cyclical data and not trying to read or guess too much. And let's do some technicals here, because these have been kind of crazy. Trying to draw Elliott Waves on this stuff has just been nutty. Like this might be a 5 and then what, an ABC, or I don't know. It just keeps kind of stretching out where it's kind of hard to use the Elliott Wave to analyze what's going on. I mean, here we get a very clean, this is like an ABC wave down here. And we were looking for maybe like a 5 up and maybe another ABC down, but instead of that kind of movement, we got this crazy top, and I'm going to do some sort of wedge kind of shaped analysis here where we had our initial wedge here, and then we broke out of it, which looked really bearish, and then we kept going up on weaker volume, on lower divergence, weaker volume, and lower volatility, and then we kind of formed another wedge here. Oh, the magnet's on. That's why the lines are going crazy. Okay, so we kind of got we got another wedge here, and then we broke bear side, and that looked really bearish, but then we got another push up, and that was again on lower divergence, lower volume, lower volatility, just a weaker push up, and then now we've gotten another move down here, and that looks like another wedge, and we've broken bear side of this one, and that looks really bearish, and we've got another push, and now we've got it flipped over here, and it looks to be trying to get down, and so I think we might be looking for a down move over the weekend on the general S&P. And this is looking pretty consistent across most of the sectors, except maybe the industrials, and a few of the tech stocks still look like they are driving forward. But financials look super bearish. Russell 2000 small caps super bearish, and the emerging markets look really bearish. The XLK is teetering right now. It doesn't look like tech is turning over quite yet. I've been watching tech, and I didn't get any shorts on tech today. And the industrials, Nasdaq, QQQ, Tesla, all of those are really hard to predict. I mean, they're up in different territory, not even kind of reacting on this trend line yet. And so they would need to kind of reverse and even get down into this area. So the industrials generally do bad in a credit contraction cycle, and they're not doing bad in this cycle. But energy definitely is. I mean, oil has already crashed, and oil seems to be pushing up now, although the oil contracts and stuff are coming in today and over the next week, and we'll see if we get another contango drop in the oil. But this is one thing that I thought would be very interesting to point out, is this entire complicated wave that keeps doing these weaker pushes up looks very much like a pattern that I didn't really expect to see across this thing, but that is a cup and handle where you're testing the outside edge of this thing the whole way, and you kind of reverse down, and you can see on the last cycle here, well, you can't quite see it on the dailies, but on the last cycle here, we got a dead cat bounce kind of off the bottom of the second wave, and so I think that this area is a good spot to look for kind of a bounce as far as the cup goes, for a base of the cup. And so if we follow this cup pattern and the cyclical data and everything that's suggesting a move down, you would just kind of get these kind of tests across the outside of the cup, and then you would get in here and get some kind of consolidation moves, and see that would push us out Yeah. So this would start pushing us out into June, and I don't know exactly when this credit contraction cycle is supposed to end, but we're really running short on time at this point to do another move down because that would be out towards, well, mid June would be. Yeah, there's still time. There's still time to do a cup and handle and a down move off the handle. But that is pushing the limits of this credit contraction cycle because the financial data looks to be switching positive next quarter, which starts pretty soon. But we could push into next quarter a little bit before it flips. And in that case, if we went down off of that, then you would get this switch into a positive growth here, wherever that happens. Or the other thing that could happen if we got this kind of cup shape down move, you don't have to go bearish on that. We could still make it down to this area here, and then the bulls could get right back up, a couple of moves or whatever, but could get right back up to this long-term financial crisis trend line, because this is where the bulls want to be, up here. If we terminate this thing, then the bulls are in big trouble, because the next tangent line down, if we terminate that, is not drawn on my chart, but it's around, I think that's around 1400. There's a 40-year long tangent line that's underneath. It's kind of the base of the entire everything bubble back to 1982. I'm calling it the Volcker line. And that's the line that Black Monday reacts off of, and that's the line that the dot-com bubble came up off of, and the financial crisis came down to that line. And that's our baseline for the entire bubble. It's around 14, and I would expect maybe 2 years to try to get down to that kind of area if we're reversing down off of the everything bubble here. But that is a downward target to keep in mind. But it does not look like a downward target to keep in mind for this cycle. Right now, we're just seeing if we can get down this or if we get up here right now. And so the bulls want to get up now, but the probabilities are in the bull or the bear case, I think about 90% chance that we get down right now. And then for bullish, we would get, just back up here and get back to this line. And in the bear case, that could also be the bear case. I mean, the bear case is just to get, the bull case and the bear case is just to kind of get down here. And the bull case would be to get up here, and if this ends the contraction cycle, if we get an end to the cycle, then it would be switching bullish anyway. But there's also the chance that this consolidates into a bigger move down, and the cycle ends down here. And so I would say this area is really high probability, and then this or this is, who knows, maybe 50-50. And I mean, of course, anything else could happen. But as far as the cyclicals and the technicals and everything is pointing, I mean, technically we're just getting these weaker and weaker ups, and it's just kind of pulling down. And then on the cyclicals, we're just looking for that kind of turnover shape at the end of the cycle, and it could still bounce and go down, kind of that two bounce shape that you generally look for in this type of cycle. Or something in here could be sort of the middle bounce. If you don't always get a middle bounce in a credit contraction cycle, but I was expecting one, and it's still possible. But right now, I'm just putting basically this area as a target, and that's around 24 or something like that, sort of as a, it's the bottom of this wave as sort of a horizontal target, and it looks like a good area to put this cup shape, just the shape of the cup, and that I would expect in either the end of the cycle or the bull case or the bear case, we should get here and then try to figure out what's going on here. And the volume and the volatility and all those sorts of things will be way different here, depending on if the cycle is over or not. And so we'll worry about that when we get there. And this is the sort of the everything bubble. And if you come over to YouTube, please hit the like button and chat in there, and whatever, the little subscribe button or something. But try to get this this posted through TradingView. Hopefully this will get posted. I stopped posting a lot through TradingView because it keeps either failing on the upload and I lose all my work, or it doesn't give me the option to post it publicly. It just sort of like limits your public posts, and it glitches when you upload. And so I've really stopped creating these TradingView posts, but I like to get one up on here and just kind of check in. And so this is not investment advice. And I think that's all I have here. That's just a general look. I mean, I could talk about kind of the things that are looking bullish or bearish today, but I don't think I have time to get this video up before kind of the weekend for people to actually um, take this into account for the end of this week. But it looks like gold and silver and Bitcoin, the monetary assets are trying to move up right now into the weekend. And it looks like a whole lot of stocks are trying to turn down right now. And that is sort of contradictory in a credit contraction cycle, because when you get the stocks pulling down, it pulls all those monetary assets down with them because you have to sell them off on margin calls. And so it'll just be interesting to see kind of the play between the different sectors and between the monetary assets, and see if this thing, see if it turns over, and see if we get some kind of recognizable shape here that makes sense. Because this whole formation here has been really tricking all the Elliott wave analysis, and it's been really tricking a whole bunch of the fundamental analysis, because we keep getting these kind of higher and higher wedges, and it's just doing this gradual rounding thing, and it really looks like an inverted, it looks like an inverted cup and handle, or who knows about the handle, but inverted kind of cup here. And that's a super interesting type of behavior to get here. And I guess that'll do. Please, hop in the comments down here, and it'll be easier to chat and comment on YouTube. Like this I'll publish this out to YouTube, and I can get in the comments there. And yeah, I think that'll do. I could go into the previous cycle a little bit, I guess, if I go to the hourlies here. So if we get into this previous cycle, it's not exactly a teacup, sort of. I mean, you could kind of draw a teacup on this cycle, and then you get this dead cat bounce right here, and then you get a rip down. So that teacup shape could happen again. I guess I wasn't really looking at this previous one as a teacup, but you can see kind of the base along the bottom of this here, and the dead cat, and then you get a big rip down on this handle, which would be a dead cat. And so I've been looking for this kind of shape to repeat, but we got this huge rip, this huge bounce down in the middle of this cycle, and we never got that in this cycle. And so this doesn't look so much like a teacup as it does just like a double top. And we sort of do have a double top, but it's a late kind of contracted double top. It's not a huge big one like this. And so this similar kind of shape here, and I can run through here. Let me run through just kind of the shape of this cycle, which is what we've been doing across all these trend lines as we test them. We come down, hit them, and then we break them, and we immediately back test these trend lines, and then we get up and we test them a couple times, and then we reverse out. And see here, when we reverse out, this terminates this line, so this line's gone. And then we get down here and we immediately back test this trend line, and then we get up here and test this thing, test it 3-4 times, not 2 times. And this is this bizarre kind of wobbling teacup testing thing where it looks like we're just kind of popping it a bunch. And so that's why I'm looking at this kind of